Welcome to the Apartment Investor Show, where we help you get smart and invest smarter in multifamily real estate. I'm your host, JC Castillo, founder and managing principal of the Multifamily Property Group. And joining me as always is my good buddy, the godfather of lending, Mr. Paul Peebles, national underwriter for Old Capital Lending. Paulie, how are you feeling today?
I am feeling great, JC. What a beautiful day it is in Texas. I know that where our guest is today, it's even nicer. So we're looking forward to hearing some of his feedback. So JC, let's kick it off. And I want to know a little bit about what's going on with rent control and growth and all the things that affect the market throughout the United States.
Well, I am excited about today's topic. It is a very important topic and a very sensitive topic to all you coastal California landlords out there. The title of our episode today is going to be the 2020 Investment Strategy, Rent Control, and Other Market Trends to Watch Out For in 2020. Now, we've got a really amazing guest, and I'm super excited to bring him on. You know, this guy, I've actually known this person for quite a long time, and he is part of a company called AppFolio. And the really amazing thing about AppFolio is that they provide property management software to companies like ourselves, who we have our own management company as part of our syndication company. And so with AppFolio and with Nat, what you're going to get is you're going to get a feel for not only the national trends that are happening across the market in terms of investments, but you're also going to get a good feel for somebody who has walked a mile in the property management company's shoes and really studied a lot about what it takes to have a successful business that caters to the management side of the business. So Nat Kunes, without any further ado, let's welcome you to the show. Thanks for joining us today.
Thanks for having me. Appreciate it.
Absolutely. So, Nat, why don't you tell us a little bit about yourself and give us a quick background on what you're going to talk about today?
Yeah, so my name's Nat Kunes. I'm one of the senior vice presidents here at AppFolio. I've been at AppFolio a little over 10 years now, and primarily working with property managers and investment managers over the last decade, identifying problems that they were seeing in the industry, problems within their businesses, and how technology solutions can be deployed to help solve those problems. And so, you know, one of the side benefits of that job is essentially I've talked to over probably 5,000 property management firms in the United States over that last decade, and learned about, you know, all the little nuances and in and outs of the business. And then also some of the key trends that you tend to see across businesses, because while some problem areas are very local and tied to a specific business, others are universal. And every property management firm and investment management firms will be facing the same kind of challenges over the next decades. And so having those conversations and then layering in all the different data elements that we have and market trend elements that we have rolled up across our 14,000 plus firms in the United States that are on our platform, we can share a lot of those different data elements back with our clients and shows like this as well to help people kind of look out for what's coming next and try to stay ahead of the curve.
It's so timely. And, you know, I was at your big AppFolio conference, which you guys do once a year, a fabulous conference in Santa Barbara. If you guys know anything about Santa Barbara, it is the place to be. It's a fabulous conference. And Nat gave a keynote at the conference to, I'm going to guess probably over 700-800 people. And one of the things that he touched on, which I thought was so amazingly timely, is this whole rent control trend that I think is happening in some pockets in the nation, but I think is something that's going to continue to happen across the nation as we've seen incredible rent growth and a lot of limited supply. So one of the things I really wanted to do is get Nat onto the show and talk a little bit about the data that he presented at that conference, because it is very good for all of you investors out there to know what is happening with rent control in this United States of America right now.
And I will add one thing to it too, is that rent control is a big piece, but affordable housing is just a larger piece of the puzzle that we have to be sensitive on going forward. Ever since the money came back into Fannie Mae and Freddie Mac back about 60 days ago, one of the biggest things that they have is 37.5% of their business has to be in affordable housing, affordable lending. And so JC is absolutely right. This is a timely discussion about, you know, what's going on in the marketplace, especially with rent control. There's areas of California that is going through the state piece, and there's areas of Oregon, New York City. There is a lot of vibrations of what that kind of an impact is going to be across the market. And are those investors, instead of investing in California or New York, are they coming into other parts of the United States? And what kind of impact is that going to have for values going up, or more competition, or rents? And so this is a good opportunity to kind of get some of these things and ideas out there right now.
So Nat,
JC,
take it away, man. Tell us about your data. Tell us about what the data tells you about what's happening out there.
Yeah, I think you guys hit it right on the head. Housing affordability is the driver. And, I've always said governments don't really tend to do anything until it hits a crisis mode. And I think, many federal and state governments are feeling like we've hit that tipping point. And so an interesting chart, which I'll share with you right now, is around rent control status by state. Now, rent control is obviously only one method that governments have at regulating housing affordability. There's many other types of programs out there, whether it's voucher-based, Section 8, low-income housing tax credits. I mean, there's a ton of different programs that are out there. HUD has some programs as well. But rent control seems to be the one that gets probably the most media attention, but then also has some of the most widespread effects that you tend to see. And so without necessarily taking a position on rent control one way or the other on its effectiveness, this chart at least shows you where rent control is embedded in the fabric of the state. You can see recently California and Oregon both passed statewide rent control bills that were signed by the governors and placed into effect. The interesting thing is if you were to look at this chart, a few years back, it would be very little rent control, right? And rent control would have been in these small kind of little pockets, maybe city by city, I should say. And now you're kind of see this map kind of change drastically over time. There's quite a few states in there that have different large cities that have rent control in place. There's also a bunch that either have a state law that says absolutely no rent control, but or some that have what we call Dillon state provisions. And what that means is a city can't pass their own rent control regulation without the state kind of giving their blessing to that. And so that's kind of a little bit of a state oversight over city governments in those types of states. And so that's kind of what the Dillon rule segments are. There's a handful of those as well, although some of them are decently sized states. But the reality is rent control, it's going to be here for a while, and it's going to grow for a while. And so for property management firms and investment managers, the key is being able to thrive in that environment, right? I think anytime market conditions change, you need to adapt your own business and evolve and change to support that. And what rent control brings is obviously a lot of compliance burdens, right? Managing who's, is the unit eligible? When was the last rent increase? Are we under the, if it's a cap type system, are we under 7% plus CPI? All those different kind of nuances that you have to track and regulate against. But if you can do that effectively, and ideally, one thing I would say is find technology solutions, right, that can help you do that effectively. If you can employ that in your business, you'll be ahead of the curve. And rent control, while it'll have an effect on the industry and the business, it won't be that outsized effect that many people might think that it will be.
Where are some of the areas that you've seen sort of the perennial leaders in sort of advancing the rent control laws and whatnot? I mean, I think there's some obvious places, but have you seen any places across the nation where you may be surprised at the amount of rent control that's coming online?
Yeah, I mean, I was a little surprised that California went all the way through with it. I think that was obviously it had been discussed for a while, and there have been cities within California that have had it for a while. San Francisco, most notably, right, has had rent control for a number of years. I think what you see and what the fear is in the industry right now is, even though a lot of these rent control laws that have gone into effect, like Oregon's and California's, have pretty high rent increase caps, right? Typically, they're actually higher than historical rent increase growth, right? So you might say on paper, well, it's not going to really affect much, right? If you have a cap of 10%, let's say, and rent's never risen more than 6% a year in that geography, no harm. But you could also make the counter argument, which I think many people have seen, which is, the caps, for instance, in the San Francisco city rent control that was, 30 years old or whatever, have consistently lowered over the years. And I think that's the biggest fear, is if it goes from 10 to 9 to 8 to 7, pretty soon you are eating into that ability to let the market kind of set and dictate.
So what I have seen is in California, as an example, is that they can increase it, say up to 5% a year. And there's a lot of good tenants out there that are happy about paying rent at X, and the landlords are happy about that. But they feel that if they don't raise it by 5% for next year, that they're going to, and this tenant say goes away, or the market changes, that they can't play catch up to whatever the new market rent is going to be in the future. So it's forcing almost for tenants every year to expect possibly a 3 to 5% increase in their rents. Any comment about that?
Yeah, I mean, it definitely changes the dynamics, right? So a couple things tend to happen when rent control laws are passed. First, you see folks that do an analysis of the portfolio, and they might say, hey, maybe I should convert these apartments to condos or something like that, right? Which A, takes supply off the market, but it might be more economical for that property developer. B, you see behavior changes like the one you just described, right? Which is, okay, well, if the cap is 5% a year, I better do my 5% or I'm going to miss out on subsequent years. Some of the rent control laws that have gone into effect have tried to create that, or try to disincentivize that, meaning they'll have an opportunity where they'll say, hey, at time of vacancy, you can reset. So they're trying to essentially put some sort of relief valve in there, but it's not foolproof. And what you do see is hey, if these people are kind of sheltering in place in that unit over 20-year horizon, you got to, be raising at the max rate each year to be able to catch up with the market conditions. So yeah, it does actually change the behaviors in the cities, and it can affect supply as well, as people might pull supply off the market. So there's that you have to look out for.
Well, I think speaking of supply, Nat, I think that, the other big piece of this whole equation, right? And I think the bigger piece is, let's talk about, what people are doing to bring supply on board. Specifically speaking about, for example, let's take a market like Dallas-Fort Worth. If you look at in fact, the stats will tell you that if you look over the last period since 2010, since the recovery, DFW has had, I think, the number one amount of supply in the nation for multifamily coming online. And so if you look at what that's done to rental growth, I think that we're starting to see the tapering off of rental growth in a big metro like DFW, which is the fourth largest metro in the nation. And so having a good amount of supply, I think, takes care of a lot of the concerns that you would typically have with rent taking off, because if you've got supply, it sort of keeps everything in check. And on the other hand, if we sort of look in a metro like San Francisco, which is very extremely supply constrained for a number of reasons, we sort of see that continue to be an issue, and we see the rent growth pop up because of that. So why don't you talk a little bit about the construction trends that we're seeing across the nation, which I think are a bigger piece of the issue at hand here, right?
Absolutely. So construction trends, there's a chart here I could show you around building permits and housing starts, but construction trends have actually reached a 12-year high this last August. So construction's just been on a tear. You mentioned Dallas-Fort Worth. That's a great example. Strong supply getting added onto the market. As a whole, if you think of the construction industry as a funnel, it all starts with building permits, right? And building permits were up 7.7% in August as well. And then that kind of translates then next into housing starts, actually building those properties. Those are up 6.6% year over year. And then, obviously that gets to housing completions, which as you mentioned, Dallas-Fort Worth is a strong market. There's a number of other markets. As a whole, multifamily is expecting a 32% increase year over year in new construction. So really strong growth. And a lot of those, that new construction tends to be in some of these primary markets. So Dallas, some of the bigger cities. Some cities are supply constrained. San Francisco is a great example of that. But what's most interesting is you're seeing a lot of new development in secondary and tertiary markets, right? So think of the Boulders of the world, the Nashvilles, even like the Boise, Idahos, right? Really strong growth in some of these secondary and tertiary markets. and that's primarily driven by a decent amount of job creation in some of those cities and people leaving some of the bigger cities. You see an outflow from cities like Chicago into some of these secondary and tertiary markets. So it's definitely an interesting aspect that's driving a lot of trends. And, as you mentioned, JC, supply and rental prices are directly correlated. The more supply that's on the market, the more pressure there will be on that rent growth percent. It's just not going to grow as high if there's more opportunities on the market.
Let's talk about migration. So a lot of people leaving Dallas to go to Santa Barbara, or is there a lot of people leaving California to go to Texas?
Definitely, I think the other way around. Yeah, the Santa Barbara to Texas. We actually are seeing a decent amount. Southern California, Arizona is strong migration patterns. There's definitely a chart here I can show you kind of just on some of the state by state migrations and inflows and outflows. But, definitely California is on the net outflow perspective. Pacific Northwest is getting a lot of people moving in. Texas has some strong growth. Even the Southeast, decent amount of growth, whereas the Northeast tends to have people leaving. So it's kind of what you anecdotally would expect, but those trends are continuing through this year as well. And so that creates a lot more demand in some of those markets. And then again, if supply isn't keeping up, I mentioned construction hitting that 12-year high. That's great, but it's still not enough to keep up with demand. We'd have to be almost doubling some of the construction in a lot of key markets that we see today just to keep up with the demand that's out there. So it's great to have that strong robustness, but we need even more. And the migration, in some cities puts that additional pressure on demand.
I think a lot of people are trying to come to Texas or go to Florida, like President Trump just became a Florida resident to save on that state income tax. So we're seeing a lot of people come for not just reasons for families and opportunities, but for economic reasons too, to save 10-13% of state income taxes. I mean, it used to be that if you were renting a U-Haul from Texas to Los Angeles, it was half the price that it would cost if you went from Los Angeles to Dallas. There was just so many people that were coming from California. I've started to see that slow down a little bit, but there's other places that are a little bit warmer, better tax opportunities. So I do see a lot of opportunities still in the Southeast, and still in areas of like Phoenix and Tucson and San Antonio, all the way up to Austin and Dallas. Some great opportunities with major highways and major international airports. A lot of biotech still going in, technology stuff still going in areas of like North Carolina and things like that. So, I still see very positive trends in multifamily in the smile of the Southwest area too. How about for you guys? I mean, you guys accumulate all this data. Tell me a little bit about, again, how do you know all this information? Tell us a little bit of what's kind of like behind the scenes of the management software that you guys do.
Yeah. So obviously, as I mentioned, we have a pretty broad reach of clients. Over 14,000 property management firms in all 50 states. Wow. And so what we're able to see is kind of insights on a city by city, geography, metro area, even state level data that allow us to see different trends. What's the number of rental applications, for instance, going in a market, right? You can start to see demand trends that way, inquiries. You can also see rental prices, rent growth, vacancy rates, occupancy rates. So you can see that kind of across these markets. Through that process, and it serves up great insights that you can then compare against other national leading data providers, and then fill in to get a complete picture of how the market's actually.
Yeah, it's amazing the amount of data that you guys collect and are able to share that information with people that are also with you within groups, just like JC, who uses your. What else can we learn in that data too? What else do you like?
Well, I mean, I think, aside from looking out, a few years ahead, there's also what we're seeing is diversification within our customer base around the types of properties that they invest in. So obviously, multifamily is strong. It's only getting stronger. It's a great space to be in. But we also see folks investing as well in commercial properties. Industrial is a great segment of growth right now, where you can see the rise of e-commerce. It might hurt some retail locations, but all those boxes, all that shipping, all that kind of stuff needs to be sorted, in facilities, ideally as close to destination as possible, last mile. So you see a strong growth in these types of industrial type projects as well. And so we see our clients kind of invest both in commercial, multifamily, even some do it, community associations, homeowners associations, that sort of thing. So really kind of crossing the gamut to have that diversification within the portfolio.
And if you guys, you talk a little bit about the best markets that people should be investing in, or is there anything that hits your radar that you think would be important to kind of share about markets that you think are up and coming markets?
Yeah, I mean, we're seeing a lot of investment, so as I mentioned, we have an investment management suite too. So we're tracking on the financial side and also on the operation side, right? So we can see that across our customer base. On the investment management side and from an investment perspective, we're seeing a lot of money flowing into those secondary markets, as I mentioned. So you're seeing growth in Austin, you're seeing growth in Nashville, you're seeing, growth in some of those types of cities, just trying to keep up with the strong demand and influx of both folks moving there. There's a lot of job creation in some of those markets, some tech jobs that are coming in. And the supply side, the construction side, even if, everybody said, hey, we want to build a bunch in Austin tomorrow, it's a couple of years, right, to get all those properties online, get them approved, built, construction started, completed. It's not like you can flip a switch and then all of a sudden have 50,000 new units come online in a market. So it takes time. And so you'll have to kind of work through those kinks in those markets. And in the meantime, there'll be strong demand, strong rent growth, all that kind of good stuff.
Well, Nat, I think one of the things that I wanted to spend a little bit of time is let you talk about your technology offerings. I'm a big fan of AppFolio, have been a fan for a number of years, and you guys have an amazing property management software. But you've also recently introduced a new piece of the business, which I think is great for big syndication companies that are looking for a real great software solution to manage the investor side of the business. Why don't you talk a little bit about your technology and what you're bringing to the market?
Yeah, so piggybacking on our decade plus of building out great software solutions into the property management, the operation side of the house, we heard strong demand from many of our clients, just like yourself, that do investment management, right? Doing either syndications or funds or different types of structures, and the overwhelming majority, came to us and said, "Gosh, there's just nothing great out there that can help me manage my investors, right? Manage who's contributed what, who's what's their ownership percentages, what's the distribution and waterfall calculations look like." Giving them a great portal and a great experience with their business that they can log into and say, 24/7 on a mobile phone, be able to log in and see their tax documents, see an update on communication from their general partner. So we heard that pretty overwhelmingly. And so that's where we decided to build out our newest product around investment management. And it does all those things and more. We've been live with that for almost a year now, and it's been really great. We've been having a lot of our
that is an important piece of integrating both the property management software and investment management system. So that kind of blows my mind that you guys have brought that together. That usually it takes two different companies to do that, but bringing them together, that is definitely a very value added for somebody that is doing things like what JC's doing some small syndication or large syndications, or even investment managers that are doing that. You can bring everything together and go to one portal, open up one tab that opens up everything for you. So that's great that you guys were able to do that. I didn't realize that. That's great.
Yeah, and that was a key element there, right? Is we talked to some of these firms that were what we call kind of vertically integrated. They're doing both, right? And being able to do it all in one system, not have to use different systems, not have to have different disjointed experiences for their investors, right? Was key. And so that's what we were able to deliver to the market. The other thing it allows us to deliver is great property level insights back to the general partner that can then be shared out with limited partners on an as-needed basis. Data that before would have been really hard or manually intensive to gather for them. And so now that can be easily kind of shared back with those partners in a couple clicks. And so that's what's really awesome about it as well.
It's absolutely such a big deal, because the challenge when you have two different disparate technologies, two different companies, is that you really can't easily port the property management data that tells you how the properties are doing into the investor portal from a different company without some really manually intensive efforts. And it still doesn't look good. But with the solution that you guys have, it's literally as easy as pushing a button inside the software. And because everything is under one company, it shares right out transparently out to the investors, which is something that we are very, very keen on. So this is a big deal. This is definitely some sort of a game changer, I think, for how guys like us are going to market. And we're super excited about your product and looking forward to seeing it grow and grow.
That's great. Nat, is there anything else that you'd want to share with us? Just talking not just so much about AppFolio, but just the market itself. If investors are kind of new into the multifamily, you guys have this, I don't think I call it a black box, but I almost have a data box that has so much information in it, and you guys are pulling stuff out of that. What do some of these new investors need to know? Is there anything that else besides migration? We understand that. Construction, we understand that. And rent control, that's kind of in only different geographic areas. That's not throughout the United States, but in just large populated areas like New York City and California, Oregon. But what else should they also need to know?
Well, I think I always say trying to look ahead and predict and place some bets on where you think things are going. Mm-hmm. If a great example of that, I talked to a client who had no affordable housing component of their business. Just 3 years ago, they said, I think affordable housing is going to be bigger in our area. And they diversified their business, grew their business by about 30% just by adding on pure affordable units, became experts in how to manage affordable housing. Yep. And the different programs. And so it's a great way to kind of grow their business by, they have that old saying, it's like skate to where the puck is going, not where it is. I think that's key, a key element of anybody in this business. So taking these trends, taking a deeper dive towards your neck of the woods, right? So these are macro trends. Some of these are nationwide trends. If you're like, I want to invest in Nashville, well, become an expert on Nashville, right? What are the migration trends for Nashville? What's the construction trends for Nashville? Kind of really diving in at that perspective. And that's what's going to help you decide where a great place to invest might be.
That's great. Now, finishing off here, Nat, if someone wanted to get more information about what AppFolio does, what's the best way to get in contact with your group?
Yeah, the best way would be to visit our website. It's www.appfolioinvestmentmanagement.com. And you can go right there and see our investment management suite of products. For property management products, it's just appfolio.com. And both of those will be up to date. You'll be able to contact us and learn more information.
That's great. JC, if somebody wanted to get more information about what you do, and again, remind us, what do you do?
What do we do?
That can help investors.
Gosh, Paulie, we've been helping investors for the last 13 years make smart multifamily decisions, smart multifamily investments. And we are just a resource of information. The reason that you and I started this podcast to begin with, Paulie, is because we love to provide information, education. And if anybody wants to set up a free 50-minute consultation with me at my company, they can do so by going to multifamilypropertygroup.com. Again, multifamilypropertygroup.com. Go to the Contact Us section and request a free 50-minute consultation. I'd be happy to sit down with you and see how we might be able to help you out. Paulie, what do you got cooking on your side?
Yeah, JC's a great resource because he's gone through a couple cycles and kind of seen what's going on. He just doesn't buy, he doesn't just want one or two properties and declared himself an expert. He's bought lots of properties, and he's bought thousands of units and sold units. And so he's done cycles and kind of understands a little bit about the business. So he's a good person for you to know or get to know. Again, Old Capital, we do billions of dollars in multifamily apartment lending throughout the United States.
That's billions with a B, folks. That's kind of a big deal.
That's billions with a B. Yeah,
yes.
We're one of the largest. We do it throughout the United States. If you want to have your hand held on multifamily, if you're just starting to get into it, give us a call. Go to oldcapitallending.com. And don't forget to listen to capitalpodcast.com. and a lot of people with 50,000 downloads of that a month on the Old Capital podcast. And so come in and listen to some of the things that we've had JC on a number of times. And it's more of an educational learning, make sure you understand where the rubber meets the road of what's going on in the market right now. So some great information today. Nat, thanks for spending some time with us. We certainly do appreciate it. Can't wait to visit you out in Santa Barbara. And if you ever feel like you want to come to the hot weather in Texas, come on. You have an open invitation to come see us. We appreciate that. JC, always a pleasure. We appreciate that. I'm Paul Peebles. Have a great day.